Good morning. Hope you guys are doing well. Today is Monday, March the 23rd. Quite an eventful overnight session. And of course, in the pre market, as you can see, we've been talking about this for a while now. A lot of the moves have been happening overnight over the weekend. This morning we had some more war news, which was, of course, Trump. We'll kind of talk about this here in a second, but Trump was basically saying he's going to end all military strikes, and recently had some more news about 30 minutes ago talking about Iran basically saying that there are no war talks. So we'll kind of talk about how that impacts the market. Overall, market is kind of digesting that information as we speak here as well. So we'll talk about that, what to expect kind of moving forward, because at this time, a lot of kind of uncertainty in the market and what to expect kind of moving forward. But we'll kind of mark out the levels and talk about the game plan coming into today and this week here as well. What's up, everyone? Good morning. I hope you guys are doing well. Hope you guys had a great weekend. Good morning, TW, P1. Good morning, Marcus, Victor, B Roots, Andy, Maria, Cody, Deuce. What's up, Ryan? What's up, Juan, Kendra, Pendy, Martin, Cuban, Maria. What's up, everyone? Good morning, Cinna. Yeah, I hope you guys are doing well. Feeling a little bit better than last week, that's for sure. But let's kind of hop right into the charts. Before we do that, let's actually pull up the economic calendar, which I have right here. Let's kind of go over some of the economic calendar, some of the red folder news events, some of the news that we had over the weekend here as well. So number one, at least coming into this week, not really too much to talk about, at least for red folder news. As you can see, 945 flash services. Of course, this red folder news isn't going to impact the market as much. What's currently going on is the war. So that's, of course, going to be the number one thing to keep an eye out for. So at least for the economic calendar, red folder news, right? Some red folder news here on Tuesday, and then on Thursday, we do have unemployment claims as well, which is at 8:30 a.m. Eastern Standard Time. Besides that, let's kind of go on to the main topic for today, which is, of course, now, as you can see, overall markets having an initial reaction, which is fairly bullish off that war news, all the way from essentially our last week's lows in the overnight session. And then we end up having a really solid push towards upside, about a 2% pop here, or sorry, a 3% pop here, all the way from the lows here on SPY and the Qs. And now you can see we're kind of right back up in towards our previous day highs, which are Friday's highs, because we have some more news, and now we're essentially fairly neutral coming into today. So let's kind of go on to let me actually bring this back up. Okay. So for the news that we had, as I mentioned earlier, right, Trump postponed any and all military strikes against Iranian power plants and energy. So he mentioned that the war is ending, no strikes are coming in. And then, of course, as you can see right here, we had some more news, which was the Iran Foreign Ministry, no talks with Washington, accuses U.S. president of buying time, regional de-escalation efforts continue. So you can kind of see one side of the markets, we're basically pricing in, right, a more bullish stance here, right? Number one, we are at a very key level of support, which we're expecting an initial reaction to go off of. So that coupled in with, of course, some bullish news, right off a key level of support, overall markets coming into right this week and moving forward, as you can see, right down in towards our 650. So this is a very key level that we're expecting the markets to have an initial bounce off of last week coming into, right, at least this week, right? As you can see, touch here, and then another touch. We're expecting a bounce coming to this week regardless, just because we were at a very key level of support here in the overall markets. Plus, a lot of the times, right, technicals do align with any sort of news events that we do have. As you can see, overall for the SPY, similar thesis, right into a key level of support, right, multiple touches. This was from November of last year. And now you can see, right, we're having an initial reaction so far here in the pre-market. And as you can see, we're already back up in towards our 660. So SPY key level on the higher time frames, 650. Buyers are stepping in right off our key level of support. Now we're right back up in towards our 660. If we're looking at the QQQ, very similar thing here, right off a key level of support, which is from this November low of last year, right back up and towards our retest level, which in this case is going to be our 595. So at least on the higher time frames, if we're looking at this on the daily or even the weekly time frame, right into a key level of support here, specifically on the SPY. Now you can see buyers are stepping in right off the bat. Right? Does this mean we're going to end up gravitating all the way back up and towards our all-time highs? Not necessarily, but so far we are getting that initial reaction. And of course, with the markets developing, and of course, we're going to have some ongoing news, right? Anything can happen, but so far, at least if we're talking about a shorter term outlook, right, the bounce that we've had coming to this morning was expected with it coming into a key level support. But let's go on to the lower time frames. And let's talk about the levels and what we have coming into today and moving forward, and what can we expect. So number one, as you can see, very bullish reaction here on the ES. Nice pop towards the upside. Now you're having a little bit of reaction, kind of right back down in towards our previous day highs, which is our Friday's highs of last week. So far, coming into market open, we're after this huge initial pop, and now you can see we're having a little bit of a retracement, but like a 50% retracement on this candle. What I'm going to be looking for coming to market open is number one, just the market to digest its news events, right? After this huge move, what has primarily been happening lately, right? We've had a lot of huge moves in the overnight session and a lot of big moves in the pre-market as well, which have really made it so the New York session open has been very difficult to trade. So the New York session normally is the most volatile session from 9:30 to 11 a.m. every single morning. But whenever there's some news event that's ongoing, something like the war news, right, that's of course going to take more precedent than the regular New York session open, right? A lot of the moves, a lot of news events that are going to happen in the overnight session. So that's why it's been a lot more volatile in the London Asia session and also the pre-market as well. So in this case, another big move, of course, up 4% in the pre-market. Now we're about up 0.5% since Sunday's open. We're just going to be fairly cautious coming to market open, just because the market, right, there's going to be a lot of rebalancing kind of coming into market open. We just want to be a lot more cautious, right? Because the main thing here is, of course, right, the only way we're expecting any continuation in this market is once the kind of uncertainty is over and once we have kind of a more clear direction on, of course, that side. And of course on the higher time frames as well. So coming to market open, at least for the levels that I have marked out, let's kind of go into the 15-minute time frame. Yes, some of the key levels I have coming into today is going to be our 6680. And then the other levels that I have marked out, which is our 6620 coming into market open. So these are the two levels that I'm going to be paying attention to. Number one, now we're going to have a gap towards the upside. But in this case, you can see we actually have a fairly small gap, right? We ended up having a gap down in the overnight session. Sorry, this was over the weekend. Now you can see huge pop towards the upside, and now we're kind of fading back down in towards this 6620. So the overall market, we're gapping up about only 1%, even though we moved about 2% down and then another 4% towards upside. And now we have another pullback, which is down about 2%. So as you can see, the overall market in itself only up about 1% here in the pre-market. The NASDAQ up about 1.3% here as well. So overall markets coming into today, right? As I mentioned, let's just keep an eye out on our 6620 along with our 6680. So these are going to be the key levels. If you do want to see some downside coming to market open, there's two scenarios. Pop and fade off our 6680 for continuation lower, or now we'd be looking for the break underneath our 6620 for a push down in towards our full gap that we've created over the weekend, which is down in towards that 6600. I do expect a very chill, New York session open, of course, compared to this 4% move in the pre-market. We could see this kind of gap fill towards the downside, which would be 6600 on the ES. If we're if we're looking for some upside here in the overall markets, upside is going to be off our 6620 or a potential kind of full gap towards the downside. But you could be looking for the bounce play here off your 6620. A little bit of reaction so far here in the pre-market. price could also come back down, fill the full gap, and then you could be looking for, right, buyers to step in here off our gap fill that we've created for this continuation higher. If you are looking for other sort of long scenarios, right above our 66.80, you can see a push up in towards our pre-market highs. That is a possibility here as well. But as I mentioned, I'm not really expecting too much coming into market open, right? After this huge move in the pre-market, there's a better chance markets are just going to consolidate, right? After this big move, price needs to consolidate. There's a very good chance we have a very tight New York session open and just kind of range in between the 66.80 along with this 66.20. If we go into the SPY chart, similar thing coming to market open. Number one, as I mentioned, based off the daily time frame, right? If you're looking for dip ads, right, it's down in towards that 650. Now with the markets bouncing here in the overnight session, right, closer to our previous day highs, it really doesn't make too much sense if you're going to be looking for, of course, long scenarios for swings back towards the upside. Day trades are a lot different because you can have tighter risk. But of course, if you're looking for a swing position, right, risk is all the way down towards that 650. You'd have to find a little bit of a low risk entry here. But if we're talking about day trades coming into market open, what are some of the levels that I have coming into today? Similar thing, 654 along with our 660. So as you can see right here, these are the levels that I have drawn out on the SPY. So coming into market open here, if we do want to see some longs towards the upside, right, you could be looking for buyers to step in here off our 654. As you can see so far, buyers are stepping in here in the pre-market. There's a few scenarios. Right, bounce play here offers 654 for this continuation back towards the highs. Another possible scenario for longs above our 660 for a potential move up and towards our pre-market highs. So these are the two scenarios that I have laid out for the SPY coming to market open. Of course, our previous day close is all the way back down in towards our 648. So if the markets do want to potentially fill the gap coming to market open, a bounce play here off our 664 is in play here as well after the markets do want to fill its gap, if we do want to go down for that gap fill on the SPY chart. So this is what we have for the SPY coming into market open. As I mentioned, it's really just based off intraday price action just because, right, we had this big move here in the pre-market session. If we're looking for some downside here on the SPY, right, key levels that we are going to have marked out, of course, is this 660. Potential pop and fade here down in towards our 654. Another possible scenario now, as I mentioned earlier, underneath that 654, we could see a potential move down in towards that gap fill, which would be that 648. So this is what I have on the SPY coming into market open here. Now let's go on to the NQ, which is very similar thesis compared to the overall market here. As for my levels that I have on the QQQ, what I have marked out here is going to be this 24,400 along with our 24,700, which, as you can see, we have multiple touches here as well. So it's just basically based off of our last week's price action. Now you can see Thursday's highs of last week. We have our Thursday's lows, and these levels so far are being used fairly nicely for the NQ. Coming into market open, very similar game plan here on the NQ. If you do want to see some upside, so far you can see buyers are stepping in right off our key level support. What we like to see is bounce play here offer 24,400 for continuation higher, or now we like to see it above our 24,700 for continuation towards the upside. If you do want to see a gap fill, right, another possible scenario, markets fill the gap and you could be looking for some low risk entry once price fills the gap for this continuation higher. So this is what we have for the NQ coming into market open here. If we do want to see some downside, potential kind of pop and fade here offer 24,700 for a push down in towards that 24,400, or now it would be underneath this pre-market level for this push down in towards this gap fill here as well. So this is what we have for the NQ coming into today. Very similar thesis along with the ES. One thing we do have to mention is that we are at a key level support here in the overall markets, right? This is the exact level I wanted to see some sort of a reaction that we have, right? If we're looking for this consolidation period, last week we mentioned we can see a move down in towards our key level of support, which happened to be our 580 here, all the way back from November. You can see nice push down in towards that level. And now we're having a little bit of reaction currently here off that 580 on the higher time frames. One thing to keep in mind, at least on the daily chart, is right bouncing off a key level of support. Now we're about to come right back up in towards a previous level of support. Now we'll see the reaction that we have off our 595. If we're looking at this on the daily chart, 595 here is key. If we ultimately reject off this level, right, potentially we can see a move back down in towards that 580. But of course, moving forward, if we break back above this 595, that is a sign of a reversal here on the markets for a potential move back towards the upside. So I do expect a little bit of reaction here off this 595, sorry. But if we can break above that level later into the week, that is a sign for a reversal here in the markets for potential pushback towards the upside. So this is what we have for the QQQ and SPY coming into market open. Now let's go on to a few other tickers here. As I mentioned, I'm not expecting too much coming into market open just because we had a huge move in the pre-market. The markets are going to be fairly volatile coming to market open, but I'm not expecting a clear direction here, at least right off the bat. So I'm expecting a little bit more consolidation after this big move. So we'll just be waiting for the reaction, of course, that we have off key levels, 588, along with our 595 coming into market open. Now let's go on to some other names that we do have here as well. If you guys do have any tickers, you guys can now drop them in the chat. We'll go over the SMH, we'll go over a few more tickers, and then we'll head on to some tech names that I do have coming into market open. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Okay. All right, let's talk about the SMH, which is of course the semiconductor ETF. So far, semiconductor ETF, right, kind of holding up here on the daily time frame compared to the SPY and Qs, which is now coming back down into a key level of support, or SMH kind of building up these higher lows. So as you can see for the SMH, really now it's just bouncing off a key level of support. Right, higher time frames and a very key point of interest. What we have here is our 380, nice bounce here off our 380. Now we're about to gravitate back up and towards the top of the range, which is our 404. So for the SMH, we can expect markets to push higher back up and towards our 404 currently, right in between the middle of the range. But as I mentioned, right, top of the range is going to be this 404. So for the semiconductors, right, just kind of going from range low back up and towards our range high. I would like to see, right, this push back up and towards our previous day highs and this 404 here on the higher time frames. As for the IWM, really not too much to talk about on this one here as well, going from our weekly lows back up and towards our weekly highs, still kind of technically inside of this range here as well. But now let's go on to some tech names that I do have coming into market open. We'll go on to Tesla and kind of make our way down. What's up, everyone? Good morning. Can you look at Netflix? It is bounced right off the 200 medium. Yeah, I'll take a look at Netflix here in a second. We'll go on to that one. We'll go on to Tesla first and then kind of make our way down. But first things first, let's kind of go on to Tesla number one. So Tesla right into a key level here, which is our 367. So our 367 here on the higher time frames, this is basically the exact level we wanted to see Tesla gravitate down towards yesterday. Let's go on to the higher time frames. So far on the daily time frame, you can see we end up having this nice breakdown. Last week, I kind of talked about this push down in towards that 360-ish. And as you can see, buyers are kind of stepping in so far, kind of right around this 360. Tesla, of course, is less bullish compared to the rest of the names. But right here, as you can see, 367 on the higher time frames. Now, what I like to see on Tesla is to see if we can get this mini bounce play back up and towards this 380. So if we go back onto the higher time frames, now let's go back onto the lower time frames here. Key levels that we have coming to this week on Tesla is going to be that 366. So far, you can see Tesla is a lot weaker compared to the rest of the names in the markets, right? Q's nice pop, SPY nice pop, Tesla. We end up getting this nice pop off our 356. But now we're closer to, of course, our previous day lows here. So our previous day lows, previous day lows right around our previous day close are 366. If you do want to see any sort of upside, really needs to see this bounce here off this 366 for continuation back towards the highs. Another possible scenario here now as well on Tesla would be the reclaim back above our pre-market highs for a potential push up and towards this 380. So for Tesla, you have a couple scenarios that you'll be looking for, primarily just your low risk add here off our previous day lows, 366. As for some downside on Tesla, I'm not really interested in downside here just because the overall market showing a little bit more strength, but you could be looking for the pre-market high rejection for a mini push down in towards that 366, or now you'd be really waiting for the break underneath your previous day lows. I would be very cautious of this scenario right here, just because the overall market, right, nice bounce in the pre-market. We've already had such a big push towards the downside, especially Tesla now in a key level support here as well, right? As you can see here, 367. I do expect any sort of initial reaction here, kind of off this 360, 367 general area here for Tesla. So coming to market open, just keep an eye out now. It's going to be off our 366 previous day low and our previous day close here on Tesla. As for NVIDIA, this one, another one that's bouncing right off our key level support here as well, which happens to be our right bottom of the range, 170. So if we were to mark out this general area, 170, along with our 192, you can see nice bounce here so far on NVIDIA. And now we're about to see a little bit of a push right back up and towards key levels in this case, right? 176 along with our 180 here, but just a mini bounce off the low of the range on NVIDIA. If you go back onto the lower timeframes here, key levels that we're going to have marked out today, of course, is that 170. Other levels that we're going to have marked out here as well is going to be this 176. So if we do want to see any sort of upside, right, it needs to be the reclaim back above this 176 for this push back up and towards this 180. Really, this is kind of the only long scenario that I do have here on NVIDIA coming into market open. If we reject, we can see a push right back down in towards our previous day close, which will be that 173. So this is what I have for NVIDIA coming to market open. A lot of these names do have a big moves, of course, in the overnight session. So as I mentioned, you just want to be a little bit more cautious, at least coming to market open. A lot of times people will see this move in the pre-market and they'll be very kind of trigger happy right off the bat just because there's going to be a lot of volatility. But whenever we do have these big moves, usually it is set up for more consolidation coming to market open without any clear direction as well. So you just want to be a little bit more cautious right off the bat. As for AMD, this is the name that was showing strength compared to the markets last week. Key levels that we just have marked out is now just going to be this range. As you can see, AMD just kind of stuck inside this range here on the hourly time frame. On the daily chart, kind of stuck inside this range here as well. So for AMD, what we like to see is the reaction that we have off our 206 along with our 190s. If we do want to see some upside here on AMD, break above this range, we can see some continuation higher above this 206. If we reject off 206, we're going to see a push right back down in towards the middle of the range, 200 here on AMD. Apple, nice kind of bounce here off our 246 right off the lows, right back up in towards our last week's highs, which happened to be our 255. A lot of these names, as I mentioned, we're just kind of having this first initial bounce here off our key levels of support. If we're looking at Apple, right, bounce off support, Qs, bounce off support, it's just a mini relief bounce so far off spine Qs, right? So that's why a lot of these names are bouncing here in the pre-market as well, because, right, NVIDIA is off a key level of support. Tesla, right off a key level of support here as well, right? A lot of these names are just right at key levels of support after having a pretty big push towards the downside. So we're getting this nice little bounce here in the pre-market. If you want to continue to move higher in the coming weeks, number one, of course, the market environment is very important. And of course, the news with the war is going to be the main factor that kind of drives the markets back higher, right? That's going to be the catalyst for the next leg in the markets is, of course, once the war is over, right? In this case, Trump mentioned the war is over, right? And you can see already the initial reaction that we do have, up 4%. So if the war is officially over, which of course we'll have to kind of wait for more information based off that, but you can already see the news catalyst that can occur with the big pushback towards the highs. Let's go on to Google, another one right off a key level support here. So really not too much to talk about on a couple of these names, just kind of bouncing off key levels, right? 296, Microsoft in a very key spot here as well, right? Microsoft's at your 200 SMA, very key spot here on the higher time frames, right? Higher lows are being built. This is a good area. I would like to see some buyers step in on Microsoft this week, kind of right off our key level support, which happens to be our 380. So 380 here on Microsoft. This one a lot weaker compared to the rest of the names. But for Microsoft moving forward, key level 382, I would like to see some sort of buyer step in for this push back up and towards our previous day highs, along with our pre-market highs here, which is going to be that 390. As for Meta, another one really bouncing off this key level support here as well. Nice little reaction so far off this 612. If we do want to see some upside above our 612 for continuation towards the upside, really that's going to be the only one scenario. If we do reject, we're just going to come right back down in towards the middle of the range that we do have here. As for Amazon, let's go on to this one. This one right off our 205, kind of the middle of the range. Amazon, really not much to kind of talk about here as well. A couple levels that I do have, really this like 205. You can mark out that 202 here as well. And then the top, which is that 215. So for Amazon, if we're just looking at this one on the daily time frame, really not too much to talk about after we had that gap down from earnings. This was earlier in February, just a lot more consolidation after earnings. So for some upside here on Amazon, we're going to need to see the break back above our 210 if we do want to see any sort of continuation back towards the upside. If we reject, we're going to see a push right back down in towards the low of the range, which happens to be our 200 key psych. Okay, let's go on to Netflix here. So for Netflix, let's go on to the daily chart, which we're currently at, and kind of mark out the levels that we do have. So for Netflix, what do we have here on the weekly time frame? So weekly time frame, nice push towards the downside. Of course, we had a news catalyst that kind of pushed us back towards the highs. And now you can see we're having a little bit of retracement here on Netflix. Let's go back onto the daily time frame. Right now, what we have here is this gap. If we're looking at Netflix in this current market environment, right, if you are looking for any sort of calls, right, you mentioned Mr. Incredible mentioned 2 weeks out. Right, it's very hard to hold, especially something 2 weeks out in this current market environment, just because we have a lot of news that's we have a lot of news that's happening that can affect the markets. So a lot of the moves, of course, are happening right in the overnight session, and if those trends don't last that long. So if you're looking to buy and hold for 2 weeks out and you're already in profit, right, make sure to lock in those profits. Of course, if you're right in any sort of day trade, right, make sure you do not turn that into a swing trade, just because, as I mentioned, a lot of the moves have been happening and there's big directions in the overnight session. So unless you're accounting that for your risks, right, you have to be very cautious. As for Netflix, right, nice kind of push towards the upside. Now we're having a little bit of a pullback right back down in towards a key level support here, which happens to be our gap that we created towards the high. So we gapped up here, nice push towards the upside. Now we're having a little bit of a pullback right back down in towards the bottom of the gap. What I would like to see here on Netflix coming to market open is some buyers step in here off this 91 key psych level. You can see the overall market actually, at least for Netflix, not really having a nice of a reaction compared to the overall markets, right? You have this nice little pop here. We're kind of closer right into our previous day close. If we do want to see some upside, we can mark out a couple key levels here. Right now, we can mark out this pre-market highs, which is really the area that we broke down from. And then we also have our 91 key psych level here on the higher time frame. So if you are looking for upside on Netflix, there's a couple scenarios that you could be looking for. You also have this kind of downtrend forming here as well, and you have a key level support. So if you're looking for some upside on Netflix, you're going to look for that low risk add off our 91 for continuation back towards the upside. Or now you're going to be waiting for some sort of consolidation and then you're going to be waiting for the break back above this trend line for this continuation higher, right? More of kind of this like inverse head and shoulders. If you can get back above our 94, which is a big psych level, and potentially kind of make this right shoulder, right? That will be good, right? You kind of have your left shoulder. If you can make a head, and you could have your right shoulder, then we can have kind of this inverse head and shoulder. What's up, everyone? Can you guys hear me and see my screen? Sorry, stream kind of cut out there, but we should be back here now. If the stream does have any sort of issues, you guys can now just refresh the stream and everything should be good. Yes, yes, yes. Awesome. Okay. I'll go over some more charts here for kind of the next 5 to 10 minutes, and then I will call it a session here. But if you guys do have any charts, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. Let's go into Palantir, or let's go into a few other names here. We'll kind of go into Palantir, take a look at some of these memory names, and then we'll go into gold, silver. We can take a look at oil here as well. As for Palantir, this one's just been ranging. Key levels that we have marked out, 150 along with their 156. Buyers stepping in off the low of the range. We like to see a push back up and towards the high of the range. So for Palantir, just kind of a little bit of consolidation here. Nice kind of pop consolidation. Let's see if we can get this next leg towards the upside. Right now, it's going to be above this like 152. So you kind of see this big push higher, consolidation. If you do want to see a push higher, break above this 156 for this pushback towards the upside. So that's what we have on Palantir. Yeah, as I mentioned, if you guys do have any issues with the stream, you guys can just refresh it and it should be all set. As for a few other tickers here, let's go on to some memory names. MU did have earnings last week. This one was recently at all-time highs, had some earnings last week, and now you can see a little bit of a pullback here. With, of course, the overall market here as well. So this is, as I mentioned, kind of reminding me a little bit of Palantir once it had its earnings and this nice kind of push towards the upside. Something similar to this, right? Nice kind of pop. We had this earnings gap down and you had a little bit of pullback here. Kind of similar to MU, right? Nice kind of push towards your all-time highs. We had some earnings and now we're going to have a little bit of a pullback here. So for MU, the levels that we have moving forward, what can we have marked out? Number one, our earnings low, which is our 436. That's going to be the key level. As you can see, multiple touches here, reclaim, mini bounce on Thursday, on Friday. Once it broke back underneath, you end up having this nice retest and then fade towards the downside. Of course, today in the pre-market, another reaction here off our 436. So moving forward here on MU, if you do want to see some upside, needs to reclaim back above that 436 for any sort of continued pushback towards the upside. If we do want to maintain weakness underneath that 436, we can see continuation back towards the lows. SNDK still somewhat holding up. Recently was at all-time highs. Friday, a little bit of a pullback. Now, if you're looking at this on the daily time frame, just kind of consolidation here right around our previous all-time highs. Exact level we need to see maintain if we do want to see any sort of push higher. Above that 700 key psych. Underneath that 700 key psych, a little bit of a pullback here underneath 700 for this gap fill, and we have other key levels here as well. Intel consolidation, right? WDC, very similar setup to SNDK. So for a lot of these tickers, right, with the overall markets bouncing, right, these ones are at all-time highs. We'll see if we can make kind of this next leg towards the upside. But with that being said, let's go on to gold and silver here. So gold and silver, this one, let's go on to the higher time frames and mark out the levels that I do have. So for gold, the levels that I do have in this case, number one are 5,400, which as you can see kind of rejected off of earlier in the month. And now we actually end up having a really big push towards the downside here underneath our key level of support, which happens to be our low that we created here from February the 2nd. So as you can see here on the hourly time frame, pretty big drop in the past 2 days here on gold. Underneath our 5,000, big push towards the downside. Underneath that 4,700, another retest towards the downside as well. And then we even had an immediate retest off our 44 50 for this continuation towards the lows here as well. Obviously, now we're having this nice bounce and we're right back up and towards this 44.50. What we would like to see is the reaction that we have off this level, right? Reclaim back above, we can see this continuation higher. Rejection, we're going to see this push right back towards the downside here. So that's what we have on gold. As for silver, this one right back underneath key levels, 75 key psych level. Now we're right into a key level support, which happens to be our 62. So this is what we have for silver. Key levels that we have marked out, 76 along with our 64. If you do want to see some buyers step in, so far we're seeing a nice little reaction here off this key area. We would like to see now, right, the reclaim. We have a couple key levels. We can also mark out this here as well, but basically you want to see silver kind of maintain this low for continuation back towards the upside. Of course, longs would be in play above our 76 here as well. But based off of the daily time frame, another one where you can see a little bit of reaction, right? Key level support, you like to see some buyers step in. Gold, similar thing. This one, bigger wick towards the downside, but kind of similar thesis here, right? Right into a key level support, you can just draw this general area. You like to see a little bit of buyer step in here. Okay, let's go on to oil, and then we'll kind of talk about my game plan coming to market open, and then we will get ready for market open. But as for USO, nice little reaction right off our key levels, which happens to be our 126, our high for this year. Basically perfect rejection off this level, and now you can see, right, moving right back towards the downside. So levels coming into today, what I have marked out is our 118 along with our 110, sorry. These are the exact levels I have marked out. So far you can see nice pop towards the downside. Currently we are actually retesting off this level for continuation lower. So if you do want to see some upside on oil, right, the bounce play here, reclaim back above this 116 for continuation, or now you're going to be looking for the bounce off our 110 for continuation higher here as well. Shorts for oil are in play underneath that 116, or now you'd be waiting for the break underneath this 110. You could be looking for move down in towards 104 and potentially 100. So this is what we have for oil coming to market open. Let's go back onto the SPY and Qs here. So yeah, coming to market open, as I mentioned, let's just keep an eye out on our 588 along with our 594 coming into market open. SPY key levels that we have marked out, 654 along with this 660. So really coming to market open here, I'm not really expecting too much since we already had such a big move in the pre-market. Going to be a lot more cautious coming into market open since I am expecting a little bit more consolidation after that big move in the overnight session and of course in the pre-market as well. We'll see what kind of moves the market. What's expecting to move the market moving forward, of course, is going to be the news events that we do have. But at least for today, I'm going to be a little bit more cautious right off the bat. I'm going to keep an eye out on the SPY and Qs off key levels. A lot of the names are bouncing off key levels of support. So if you're looking for any sort of trading opportunities today, right, it's really just going to be based off of intraday price action. We'll see how that first 5-minute candle. This is a day where I'm going to be using that first really 5 to 15-minute opening range because, of course, right, we're kind of farther away from our previous day lows. Right, our previous day highs is very close by as well, so we can use our previous day highs. But basically, I'm going to be using that first 5-minute candle to give me a good indication of what the market wants to do, at least right off the bat. As I mentioned, I'm not expecting too much. I'm most likely going to see, the market's most likely going to see a little bit more consolidation coming into market open and after the market opens as well. So if we do want to see some upside or any sort of downside, it is going to be fairly difficult, at least right off the bat. So just be a lot more patient coming to market open. I know after seeing this big move in the pre-market, you're going to be pretty trigger happy right off the bat, looking for that first initial setup. I'd say, right, be more hands off, right? No reason to kind of jump the gun in this market, especially because what's moving the market is news, right? If we don't have any news, we want to be a little bit more cautious and just wait for the markets to consolidate for the kind of that next leg towards the upside, or if we do want to see that gap fill that we created here over the weekend. But yeah, that is going to be it for me today. I'm going to get ready for market open here now. If you guys did enjoy that, appreciate if you guys drop a like and sub. With that being said, if you guys haven't joined the free daily watch list, that is also in the description below. And yeah, that is going to be it for me today. I think we had some more news as well. But yeah, that is going to be it for me today, and I'll see you guys all tomorrow. All right, take care, everyone. Have a great rest of the day. Peace.